Andrew, I'm curious about your thoughts of the impact the vaccine will have. We've been talking to a few economists about this because on the one hand, it seems as though financial markets think it will just be a snapback and everything returns to normal. But in some areas, has the structural damage been so severe that that won't be the case? And if you just look at pure economics.
Yeah, I think there are a couple reasons to be cautious or wary about how much it will help. One is just, we don't actually have a vaccine yet, although there's encouraging news across a number of test candidates. Two is even once we get one, it'll take time to produce the requisite number of doses. And three, as you said, there could be a lot of so-called scarring effects or second round effects vis-a-vis the labor market, smaller businesses that have suffered huge losses in revenue and may have to close even with government assistance in some cases. So I think that's the risk, again, as we get into 2021, if we're still wrestling with the control of the virus and we don't yet have a vaccine until, say, mid to late 2021, for example, we could see persistently elevated levels of unemployment and also business closures. And that will take much longer to come back, even after people are no longer scared of getting infected. So I think that's the big focus. And that's where you've seen a lot of governments really try to target their fiscal policies on supporting workers who lost income, and also in some cases businesses with loan guarantees to try to tide them over. But that gets harder the longer this period lasts.
Sure, but how much of that you think, with the uncertainty of the COVID curve, how much of that would translate into policy support coming in from the PBOC or the authorities in China? Because they haven't quite stepped up to measure up to some of the other central banks in the world. And yet you're seeing the markets rally away like they have all the support they need.
Well, I think first and foremost, the cheapest form of stimulus is getting the virus under control. So if you really did get rid of the virus, that would be worth a lot, clearly, in terms of economic activity. And clearly, the Chinese authorities have pushed hard in that direction. Having said that, we do think a risk, both in China and in a number of other countries in the region, is as you see this strong economic data for May, June, July, policymakers may feel more relaxed. There may be a little stimulus fatigue and maybe a little bit less pressure on them to continue easing. And the risk is, if we do get a bit of an inflection point here, as we still need to keep some restrictions in place and the virus is still out there, the risk is that we see a meaningful slowdown, not necessarily a double dip, but just slower growth going forward. So I think in the case of China, as you mentioned, short-term interest rates have drifted back up. Policymakers have seemed to shift their focus back a little bit towards financial risks and avoiding further growth and leverage. That will be the right call if we continue to see improvement in economic activity and the virus remains under control, most likely. But if there's any resurgence in the virus, or if consumption is a bit slower to come back, then they may need to ease further.